Hi, it's Carrie here from Spotlight and welcome to the second video in our financial literacy series. So in this video I'm going to look at the key issues we identified in the previous video when we went through Faux Limited's accounts, which were mainly that they had achieved more in sales. Sales had increased from 1.6 million to 1.7 million, but actually the money they were making on those sales had dropped. Gross profit, which is the profit after all direct costs are taken into consideration, has dropped from 531,000 to 297,397. So while they were busy, they were making less money on their sales. The other key issue that we identified was that they had 166,000 pounds in the bank at the end of 2022, but nothing at the end of 2023. So I have popped in the key figures into our value gap analysis report, and the first thing we're going to look at is the cash conversion cycle. So at the moment it is taking 128 days from the point at which goods are ordered to receiving the money from customers. Now, if at the moment there's 29 days it is taken on average for customers to pay. In the constructions industry, that's quite good. However, there are work in progress days of 105. So there is 105 days worth of work locked up that has been done but not invoiced to customers. Now, if that was changed to 75 days, so reduced by 30 days, £121,976 would be freed up in the bank account. The client is also paying their suppliers on 6 days rather than 30. Well, if we increase that by 24, so paying suppliers on 30 days, that would put an extra 97,581 in the bank account. So working on those two changes would have a cash impact of 219,557. So rather than approaching the bank about increasing their overdraft, if they worked on these two strategies, they would have an extra £220,000 in the bank. They wouldn't have their cash overdrawn and they wouldn't be paying the interest and charges associated with the overdraft. Now, if you look at the profitability, now gross profit margin actually dropped from 32% to 17%, but if the client just worked on increasing their margins by 5%, that would leave an extra £89,000 of gross profit. The cash impact of that £89,000 would be an extra £66,804 in the bank. So taking those three strategies, so that's invoicing customers quicker, paying suppliers slower, and increasing the profit margin by 5%. That has an impact of an extra £286,000 in the bank account, an extra £89,000 in profit. Now, if they look to increase the gross margin to the same as the previous year, it would actually put an extra £419,000 in the bank account, an extra £267,000 in the profit, and would have a potential business value impact of £935,000. So this is why it's not only looking at the figures, it's interpreting what they mean to be able to give you the strategies to make your business more profitable and at the end of the day give you more value. Any questions or queries, please give me a shout. Thank you.